Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
To give us an inside look at all the exciting things that are going on. So it's great to have you again for what is now our monthly appearance. And how are you, Mr. Andrew Maguire of Kinesis Money?
Yeah, really great, Chris. And it's a pleasure to be back. And I'm loving your work, my friend. Let me first ask, how's the book going? How's the book selling? I hope really well.
The book is going well. I actually have, let's see if we pull it back. I'll have to take a step out of my silver vault for a minute there. But yeah, it's going really well. And it's nice because I remember the day you were almost the last interview. Here's the book. And I remember by the time we finished recording that day, you know, I guess you don't know how something goes commercially or how other people react, but it was, I remember feeling, wow, the stuff that's on these pages, I was proud to be a part of it. Your chapter in particular was incredible. I think people are appreciating that. It puts into context, you know, in one book that they can read and, you know, make their own conclusions, but at least a lot of the information that, you know, you've been speaking about that. I think it's unfortunate how Bart mentions that, and you've talked about this in your chapter, when, you know, this could have come out. We didn't need Department of Justice in 2020. You were telling that you were available to speak at the meeting, CFTC, who still has no comment. And maybe we can start there. What would you say about the CFTC that even now, so basically Bart spoke out, confirmed what he saw. The Department of Justice has, you know, thousands of incidents of violations during the period where the CFTC said they found nothing. So if you want to take it from there, we'll dig into a whole bunch of good stuff today.
Yeah, right. And I think, oh, that's great. I mean, I will do. I think bottom line, what still rings in my ear, and I think we talked about this before, was coming out of the presentation with the DOJ, having given them 88 examples of where gold and silver were going to fix the next day, all done through lawyers and time-stamped. All they could say was ultimately, yeah, but what about the economic consequences of this? Because we are dealing with two things. The taxpayer-funded banks, which could create an awful lot of problems for, you know, for the economy. Of course, you see these banks going down, or directors, CEOs perhaps even put in jail. But the other thing is that it also deals with JP Morgan, which I think we'd like to talk about a little bit about JP Morgan in a minute. Sure. Because there's a whole story to say. But I think really, it really needs, sometimes it's best to step back, because I know we're dealing with people that watch these fantastic webinars you put on. There is a whole range of people. Clearly, there's people who just want stacking. I say just, that's it's probably the smartest people around. Just stacking, physical. You get traders. I know some of the wholesalers. I know that's the fact, and some of the bad guys, I'm sure, want to see if they're mentioned. And we always like to give them a little mention. In fact, just before I start, don't you have some little figures? Some little silver figures that you can create some games with?
Well, I figured, you know, add some fun into this whole saga, and I've had my little silver soldier. So as some people in our audience know, we're getting Bernanke working a printing press, minted in 1 ounce silver form, and a whole collection of central banker action figures. Because I think a big part of it is that, I don't know, maybe we'll all be shooting each other in the streets in a year or two. I don't think so, and I hope not. And you know, and I think it's possible to follow what's going along in silver. You just mentioned some people stack. I get it, and I've had the times where I've been all in, and I wish the price would go up now. Yet, really, the mindset, and that's why I appreciate the information you share, where it's like, if you understand what's happening, all right, well, great. If I have income coming in and can buy silver at a lower price each month. So I think it's good to have a positive approach and share the information in a way that people can take action on it rather than be fearful. And so we're having a little fun here.
Yeah, and let's, I mean, in that vein, let's, although we look at gold, of course, gold because it's related to silver, but really what we do is we look at silver for many reasons. Number one, because it is the more interesting of markets. And because it's smaller too, it enables us to see the footprints much clearer of these same actors in the much more opaque and much larger gold contract. And we're talking about Comex Futures here, of course. So now, as we discussed last time, and as you and your guests have been reporting, and many, many guests have really good interviews, we're evidencing some very unusual silver footprints, both in what we are seeing reported by the Comex, but also the elephant-size SLV dealings involving custodian JP Morgan. Now, we realize they're just a custodian, not so fast. Now, picking up on what the DOJ determined about this bank after the 16th of September last year, that's when they named it, quote, a criminal enterprise. It just beggars the question. I've seen you raise this question. Why is this criminal enterprise allowed to continue to provide market-making services on the same CME exchange, which is under investigation? But even worse, Chris, still sanctioned to act as a trustee for any entity, let alone SLV, the SLV ETF. Now, one might argue, fine, at least this bullion held by the ETF is audited, but it's not, and this is the key. Now, let's walk through the logistics of bringing 1,000 ounce bars. Now, you've picked these bars up, they're heavy, and you can be
well, I had one once, and I had it delivered to the New York Stock Exchange where we had an office because I didn't have a doorman in my building. I tried carrying it from New York City to Hoboken. It did not go well.
Well, you know, I guess really if you were in a JP Morgan building, you might even find one flying out of the top of the building along with one of their employees. But anyway, let's look at these 1,000 ounce bars in the logistics of it, and also whether how well they're audited. And then what I'm going to do is tell your subscribers exactly what happened to the close to 6,000 lots JP Morgan, let's say, sold on June the 29th, which was first notice day, as you know, of the July silver futures contract. And so now, to provide a little context, I'm going to illustrate by using this actual delivery receipt from the 19th of June, where we had 958,000 ounce bars received in our partners Swiss vaults. Now, I use this as to provide a real example of why it is actually impossible to audit bars entering and exiting the SLV ETFs. Now, to do this, let's just walk through the real intake processes that vault providers are required to follow, which underscores that it's logistically impossible to intake the sort of daily volumes reported by SLV. Now, out of this 958 bars, 1,000-ounce wholesale bars received on this bulk bar list, which we receipted in Zurich on the 19th of June, so recently, 630 of them, I've circled here, 630 of these numbered 1,000-ounce bars were shipped direct from JP Morgan. Right we go. That's interesting. So just because of what's going on, just out of interest, we looked to try and verify if any of these bar numbers had come from, or worse, was still sitting on the SLV bar list. Now, we've never tried to do this before, but it soon became clear that such an undertaking would actually be totally impossible. And it's staggering and actually implausible that this published, the published SLV bar list that you can pull up on the internet is not on an Excel spreadsheet. That makes any attempt to marry bar numbers absolutely impossible. Now, in order to attempt to marry up bar numbers that we've received, it would entail manually trawling through 7,848 pages as of today of bars. That's hardly confidence boosting when so many questions already hang over the integrity of the ETF inventories. Now, clearly, there must be a secondary book which is deliberately not shown. There has to be. It's impossible that an organization of that size doesn't have these bars on an Excel sheet, but right. Not available to anyone. Now, so not even questioning the massive wholesale shortages that really would prohibit in us obtaining any form of tonnage size, it beggars the question, where is this bullion coming from? But let's look at the impossible logistics first of how, this is how we would intake bullion and how we do intake bullion and how any organization would intake bullion. So we know it's not unusual to evidence 200 tons of inflows on a single day to the SLV. Sometimes it's more, sometimes it's less, but just to illustrate, when we do see 200 tons, it would constitute over 6,400 individual 1,000-ounce bars. You know how heavy they are. Now, the SLV purpose purports actually to be an audited ETF, but if you look at these fluid intakes or offtakes, just these audits are impossible. Experience tells us that to ensure accuracy and integrity to meet insurance compliance protocols, at the very least, you would have 2 authorized personnel to verify bar numbers, weights. As you know, they all vary marginally, and that would be for any intake or offtake for that example. Now, at best, without breaks, that would mean that you'd have 2 personnel processing a maximum of 2 bars a minute between them. And that would be to weigh and log the serial numbers. Now, good God, that's 55 hours. Now, even running 3 shifts a day, that's 3.5 days for 1 day's intake. How is that possible? And given that only 12 tons of silver fits in a truck, unless it's a massive truck, which they do not use around London, that is up to 16 trucks on a single day running around the M25 network north of London. Now, of course, this raises a massive red flag, and we want investors to understand these things so they can make informed decisions, which is really what your show's all about. Now, with that said, let's now look at where this available physical silver could possibly come from in such large quantities at a price which most wholesalers and liquidity providers do not offer for this kind of size we're evidencing the flows into SLV. Number one, it isn't available to buy 200 tons or 60 tons. Okay, so we get just under a ton, but that's it. And that took weeks to get. So in fact, for the record, I mean, really 21.5 is probably the level where you might get somebody to step up with a little larger size. Now, obviously, while rational traders, puzzle, now this is really where we come into the JP Morgan story. And this is why, if you might want to put up that day when they issued this 5,000, close to 6,000 lots, 5,975 lots for as sold. Well, yeah, right. You know, so we might say, well, how come there's a 30% arbitrage opportunity between spot gold and silver that had not been closed on the 1st of June, which was the 29th, which was notice day? And it still exists right now. In fact, if you look at the chart right now, because of the breakout, it's 55-cent premium in the off the board in delivery July contract, which went off the board at the end of June. So this is the question which I get most of all. What's going on here? It's 48 cents to 55 cents right now. What's happened? And as we know, JP Morgan, we just alluded to this, is under investigation by the DOJ. And it's posturing to settle the RICO case against them with massive fines and possibly, yeah, right, minimal jail time for the lowliest traders. That's been promised. I don't think that's going to happen. Certainly, I don't see it happening at the board level where they would have known about these excess position limits and these trades. But the first thing they've been required to do by the DOJ is to get their position limits back in line with CFTC agreed levels. Now, it was 1,500 lots, you remember, and then it was increased last month to 3,000 lots, and uploading and selling close to 6,000 lots does get the monkey off their back, monkey being the DOJ. But the footprint suggests that this criminal enterprise found a way to actually profit greatly because they still control the unregulated exchange for physical spread, which is what we just referred to as that spread that we just looked at. Now, so really, let's do the sums. To sell 5,975 lots at the Comex price and immediately buy back these lots, and at the day it was 30-cent discount. They would buy back silver at Loco London over-the-counter spot and funnel it into the over-the-counter silver market and SLV. Now, first of all, let's just rationalize this in tonnage terms. That's 900, and these numbers just don't even jive with the brain when you're in the wholesale business. 929 tons of wholesale bars. I mean, that's a staggering quantity of physical bars, but also this would have pocketed this insider close to 9 million in arbitrage profits without giving up a single ounce. Believe me, they still own all this bullion. There's a myriad of ways they can avoid exceeding the 5% reporting threshold. They can go long the unregulated over-the-counter market, which is completely unregulated. They can lease it to an underwater short seller. And the Scotia Mercator story, and I just did an interview yesterday with Harvey Organ, who walked into the Scotia Mercator vaults with his auditor, and what did they find? They were refused to entry at first. They threatened to call the police. They came in, all the bullion was gone. Took 6 weeks to get it back. So in other words, you know, there are short sellers out there that would be keen to get any form of bullion, or indeed they could funnel it through an ownership stake in a Cayman company. All three of these conduits are easily available to this too big to fail criminal enterprise. Now, Chris, we get a lot of good questions, but what they boil down to are what are the no-brainer physical drivers to blow gold and silver through these historically anchored resistances. And what are we seeing today? We've seen historical anchors smashed today. Like, you know, so essentially we have every reason. And I mean, these are physical drivers. I mean, we're talking about 3 trillion that's been printed by the Fed. I mean, you've talked about this stuff, rescuing the spoos. I mean, bloody hell, we've opened for 2020 business Since we opened for 2020 business, the Fed has expanded its balance sheet by 4 trillion to 7 trillion. I mean,
Yep.
and a trillion rolls off the tongue. If you put that into context, $1 trillion stacked, $100 bills stacked with stretch 12,000 miles high. I mean, these numbers are mind-blowing. And 7 trillion. I mean, we've increased 4 trillion to 7 trillion since January. So, I mean, we're seeing PE levels in uncharted territory. Sovereign bond market is in a bubble. I mean, global debt to GDP is something like 370%. Of course, the physical assets priced in US dollars have to rise to maintain this equilibrium. And then with all the markets in uncharted territory and such strong demand, really, for unprintable physical gold and silver, there's a massive paper to physical disconnect, and it's underway. And this is exactly what we're witnessing now as we speak today.
Yeah, and Andrew, I have pulled up here our Comex delivery notice, and here is the 5975 contract. So that's about 6,000 times 5,000 ounces per contract, gets us the 30 million ounces. That, again, like you mentioned last Wednesday, we saw that pop up, and in their warehouse report went from eligible to registered. So again, I had wondered, could this be in connection, something with the Department of Justice investigation? But basically, it sounds like you're saying the Department of Justice told them to start unwinding this.
Well, all of those positions, I mean, they exceeds all position limits. So in itself,
I did think that was cute how they just blow through the position limit. So it's even if you're unwinding something, why not break another rule in the process?
Absolutely. And of course, but the thing is that I think the message we're trying to say here, why are they going to, everyone knows that silver is about to break out. Why would you sell this much bullion of your bullion holdings in the 17s when you know, at the very least, anyone in the industry will tell you 21.5 is probably the minimum price for silver right now, even before we start thinking about the 50s. And I think 21.5, it probably jumps to 30 just as quick. But I think, this is, of course, they didn't sell a single lot. What they did, as I say, they got the DIJ off their back. They got rid of the position limits on the Comex and shuffled them right into the unregulated over-the-counter market. And they're still long. They're still long those positions. So nothing's changed. They haven't sold a single ounce. And this is why I think a lot of people are confused as to, well, why would they do that? So they made money doing it too. And I think that's the other thing, is that there used to be, I mean, really, when you used to hedge, before the market broke in on the 23rd of March, what would happen was there was an actual a positive carry cost. What you would do is you would, if you shorted silver against the dollar, or even shorted gold versus the dollar, you would actually be paid a premium. You'd be paid to do that, in a sense. There was a positive carry.
Right.
That all changed on the 23rd of March. And now the exact opposite has really, the exact opposite is happening right now. So you may as well be the other way around. You may as well be long over the counter and sell a higher priced EFP, which is right now we're talking about 50 something cents. And I think really what we're looking at here is, whereas the spot price used to be the price, and you'd see the futures price coming crashing down into the spot price when it came to an option expiration or those kind of conditions. I think what's happened is it's now the other way around. I think the price is the futures price. This is really this is a complete turning on the head of what we were used to historically experiencing over the years.